Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, March 25th, 2009. We begin in Germany, where the IFO Business Confidence Index declined slightly in March, sliding to 82.1 from 82.6. That put the index at a 26-year low. The current conditions subgauge continued to slide, while future expectations rose yet again. That suggests that even though conditions remain tough currently and firms are scaling back production and cutting jobs, there is some silver lining in that they expect conditions to improve in the next 6 months. The euro-dollar pair hit a low following the German business confidence data near the 1.3420 level. However, despite better than expected news from the US, which we'll get to shortly, the euro climbed higher in New York trading. The weakness in the greenback stemmed from comments from Treasury Secretary Tim Geithner, in which he said the U.S. understood and was open to a proposal from the Chinese that global reserves should be based more on special drawing rights that are currently used at the IMF. The special drawing rights are used to measure reserves with the IMF and are based on a basket of currencies. Treasury Secretary then clarified his remarks to affirm the dollar's role as the world's reserve currency. That confusion led to a fall in the dollar, though today's top for the pair at 1.3650 was lower than yesterday's high. And fundamental news from the UK, Federation of British Industry revealed that retailers fared worse than expected in March. Only 19% of retailers said year-on-year sales rose in the first half of March, while 63% said that they were down. The resulting balance of negative 44% returned the index to the heavy falls seen in the 3 months prior to February's less severe rate of deterioration. The pound slid in today's trading, wiping away its gains from yesterday. The euro-pound pair, for instance, clawed back the 200 pips it lost yesterday. The euro rose during the European session and then extended those gains in New York trading. In a second example, the pound-yen pair, after rising to the 145 level yesterday, fell back down to the 141 level today. Again, this effectively wiped out yesterday's gains, but now puts the pair back at its power line that acted as resistance for a long time. Traders should watch whether this level holds as support now. Turning to the US, orders for durable goods surprised forecasts and climbed in February, though demand from January was revised down rather sharply. Manufacturing orders increased by 3.4% last month, a big surprise to economists who had expected a modest decline of 2%. Core orders, which exclude transportation goods, rose 3.9%. Purchases of new homes rose 4.7% in the U.S. in February to an annualized pace of 337,000 units, rebounding from a record low in January. That headline figure surprised forecasts of a decline to 305,000, while January's number was revised up to show 322,000 new home sales. Buyers welcomed homes that continued to fall in prices, as well as cheaper mortgage rates. Those two conditions are going to be key to stabilizing the market, as there still remains a lot of unsold inventory that needs to be worked through before we start seeing a real recovery in the housing sector. U.S. stocks responded positively to the two better-than-expected U.S. releases. However, stocks turned lower after the Fed's Janet Yellen said that deflation poses a greater risk to the economy currently than inflation. We showed yesterday how this pair had come up against resistance at the 98.35 level, and that resistance held today. The dollar-yen pair was down overnight, followed by a small counter rally in the New York morning, but eventually the greenback paired evened those gains. The pair's slide found support at the 96.90 level. The US dollar-Canadian dollar pair had a back-and-forth day today, as the pairs caught between a downward sloping line of resistance and a horizontal line of support. Overnight, the greenback tested the 1.2350 level, fell back down to the 1.2220 level during the New York Open as U.S. stocks increased risk appetite, but then retested resistance in New York afternoon trading. Oil prices were down about $1.30 to $52.70 a barrel, which also pressured the loonie. Okay, time to check out some upcoming releases. Tonight, New Zealand reveals its current account for the fourth quarter, Australia posts its leading index, and Japan reveals its corporate services price index. Overnight, the UK will release data on retail sales, business investment, and housing prices, though that last release might be subject to change. Continuing overnight, we will also get data on consumer confidence from Germany and data on money supply and private lending from the Eurozone. Tomorrow, the U.S. will post weekly jobless claims data along with the final version of fourth quarter GDP. Also tomorrow, the Treasury Secretary will be testifying to Congress on financial market regulation. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.